X-ray cloud engineer from Malaysia's Dennis Lim has joined an elite global group of AWS professionals after successfully completing all 12 AWS certifications, earning him the coveted AWS Gold Jacket, a rare distinction awarded only to individuals who have mastered the full AWS certifications track. Lim said his cloud journey began during his postgraduate studies, where he was first introduced to AWS.
Yes, it's definitely a long journey. So I got exposed to AWS during my master's, and that's when I got more interested in cloud computing, and then that's why I decided that, oh, if this is something interesting, then I want to learn more about it. And I found out they have a bunch of certificates program going on, and I myself, I do like certificates because of the way that they structure the learning program. Yeah, so that's where I got started. Then the further down I go, the more I realize, the more I know, the less I know in a sense. Yeah, so which caused me to want to pursue more knowledge, be more curious about what other services AWS offers to the world, how can it help the technology world. And yeah, one thing led to another. I just slowly got to accumulate all 12 of them. And yeah, I'm very happy to finally got the golden jacket.
Lim's achievement is not only a personal milestone, but also a practical advantage in his work at X-Ray. He noted that he has been very lucky to apply much of what he learned directly to real-world projects.
Okay, so I'm very lucky in the sense that a lot of the things that I learned theoretically, I get to do it on my day job. So if not, I can have like our own sandbox environment that I can play around with, explore around different services, just hit walls here and there just to understand better.
AWS certifications ranging from foundational cloud knowledge to specialized areas like security, data analytics, DevOps, and machine learning are widely regarded as some of the most rigorous and industry-relevant credentials for cloud professionals. Completing all 12 demonstrates both technical depth and multidisciplinary breadth. His accomplishments underscores the growing demand for skilled cloud professionals in Malaysia and the broader ASEAN region as companies accelerate digital transformations and cloud adoption. Wall Street's main indexes closed lower on Monday, December 8, with most S&P 500 industry sectors in the red, while Treasury yields gained as investors waited nervously for the Federal Reserve monetary policy update due in 2 days. Hopes for a December rate cut were solidified after last week's data that showed consumer spending increased moderately toward the end of the third quarter. However, investors are still waiting for clues about future policy moves from what is expected to be the most divided Fed in years.
The down market today, I think, reflects two things. One, lots of uncertainty as we head into the Fed's meeting tomorrow with the conclusion on Wednesday. And two, higher interest rates are really starting to pressure those interest rate sensitive elements of the market, which is hurting elements like the Dow a little more than the S&P 500. So we're seeing a challenge really across that. And yet it was the interest rate sensitive elements of the market that have been the strongest performers to start the quarter. Utilities, healthcare, things like that. That's what we're seeing back off as investors just kind of probably retrench, waiting to hear what the Fed has to say about, is it one more cut and then we're going to take a pause, or is it one more of a series of cuts as we head into the end of Chair Powell's chairmanship in May? I think it seems most likely that they get a rate cut and then the debate is what's next. And the real reason it seems like they can move ahead is inflation is elevated but not accelerating. And two, the labor market does look soft but not fully deteriorating. And three, they're still well ahead above their neutral rate. So they've got room to bring interest rates down and still stay neutral. So it seems like the odds are for the Fed to go ahead and cut and then reevaluate as we get into the new year.
Traders are now pricing in a roughly 89% chance of a 25 basis points rate cut on Wednesday, December 10, according to the CMS FedWatch tool. Meanwhile, higher yields on U.S. Treasury bonds also put some pressure on equities. The U.S. 10-year Treasury yield rose soon after a powerful earthquake struck off the coast of Japan.